Hi professionals, this is CA Rohanar Pingai. Welcome to Tax Guru YouTube channel. Let me first introduce myself. I am practicing chartered accountant based in Mumbai, and I am also a partner in Motilal and Associates LLP, member firm of Marks Network. Yes. And today onwards on this Tax Guru platform, I'm going to start with video series on case laws on direct tax and case laws on GST. One video series is on income tax and another video series on GST. So today in this video, we will going to discuss case laws related to income tax. The reason behind making this video series is as a professionals, we have to be updated regularly. And most of the times we lack in that. And particularly this video series is for those professionals who are dealing in litigation practice. So for them, it is utmost important to keep themselves updated with recent case laws because they can be relate to their clients also. So this is the reason. Hope you would like this video series. Let's dive into it. Let me allow to share my screen. Hope you will see my screen. What law says? Direct tax part 1. We will going to discuss case laws reported to ITAT and then second part High Court. So first ITAT, first case law. DCIT versus Larsen and Toubro Limited, ITAT number 3369, Mumbai 2023, assessment year 2009-10 and date of order 20th December 2024. Relevant sections are Section 2, Section 2, subsection 42C, Section 48, and Section 50B of the Income Tax Act. Let's understand facts and issue of the case. Assessing officer reassessing the assessee under Section 147 of the Act. While reassessing, assessing officer disallowed the expenditure incurred on transfer under Section 50B of the Act, that is slum sale. Contention of the assessee was that the said expenditure is allowed under Section 48, Clause 1 of the Act. Assessee preferred an appeal to CIT appeals, where CIT appeals allowed this ground of appeal. Aggrieved, revenue preferred an appeal to the tribunal. Let's understand what tribunal observed and held. Tribunal observed and held that while computing capital gains arising on slum sale, not considering the provisions of Section 48, Clause 1, that is, the expenditure incurred in connection with transfer will be in contradiction to the intention of the legislation. There is no dispute that the expenditure claimed by the assessee are incurred in connection with the transfer of the business as a going concern. Tribunal didn't agree with the arguments made on behalf of the revenue, and it upheld the order of CIT appeals and dismissed the ground of appeal filed by the revenue. So it will be in favor of assessee. Next, Saudharma Brihad Tapogachya Tristutile Jain Sangha Samarpanam versus CIT exempt 2025 ITA number 157 Ahmedabad of 2024, date of order 3rd January 2025, and relevant section is Section 12AB of the Act. Let's understand Facts and issue of the case. Assessee Trust was a charitable cum religious trust registered with the Assistant Deputy Charity Commissioner, Ahmedabad, filed application for registration under Section 12AB or in Form 10AB. In this application, applicant mentioned that it had charitable objects in addition to religious objects. CIT exam denied registration under Section 12AB on the ground that the assessee trust was a composite trust and its object was restricted to benefit of a particular religious community or caste, which was a specific violation under Clause D of explanation below Section 12AB, subsection 4, read with Section 13, subsection 1, Clause B. Aggrieved with the order, CIT exempt assessee filed an appeal before ITAT. Let's understand what tribunal observed and held. Tribunal observed and held main objects of the trust make it clear that all the objects were related to religious activities, which was a specific violation under Clause E, Clause D to explanation to Section 12AB, subsection 4. So it was against the assessee. Next case. Rotary Charity Trust versus CIT exam 2025, Mumbai Tribunal, ITA number 6133, Mumbai of 2024, assessment year 2024-25, and date of order is 9th January 2025. Relevant section is section 80G. Let's understand facts and issue of the case. Assessee was a registered charitable trust engaged in promoting various public charitable activities. Assessee filed an application in Form 10AB for final registration. Assessee, while applying, inadvertently selected wrong section code. This happens with many of us. Means while applying or while filing any application or return in hurry or in any other situations, there will be clerical mistakes. So this case is related to that. CIT exam rejected the application and aggrieved the assessee filed an appeal before ITAT. Let's see what tribunal observed and held. Tribunal observed and held that there was a merit in the claim of the assessee that it had selected the wrong section code inadvertently while filing the application in Form 10AB. Tribunal remitted the issue back to the CIT exam with a direction to grant final approval if the assessee was otherwise found eligible. So it was in the favor of assessee and it is a good case to defend our client if client makes a clerical mistake or on behalf of client if we are applying, if we made clerical mistake. So we can defend ourselves with this case law. Next, Deepak Balubhai Patel HUF versus ITO 2024 ITA number 942 Ahmedabad of 2023, assessment year 2017-18 and date of order is 22nd August 2024 and relevant sections are section 69A, section 115BBE of Income Tax Act. Let's understand facts and issue of the case. Assessee was HUF, derived income from house property and income from other sources. Assessee deposited cash during demonetization period. Same was recorded in his books of account. Case was selected for scrutiny assessment. While assessing officer rejected the books of accounts and made addition as unexplained money under section 69A and tax under section 115BBE. Aggrieved assessee filed an appeal before CIT appeals. However, CIT appeals confirmed the additions made by AO, means against the assessee. Again, aggrieved assessee filed an appeal before the ITT. Now let's understand what tribunal observed and held. Tribunal observed and held that In the present case, the assessee had recorded the cash deposit in his books of accounts, and source of cash deposits during the demonetization period were also being maintained by the assessee, and therefore addition made by assessing officer were deleted and appeal filed by the assessee was allowed. Very, very important and good case law. Those who are dealing with the demonetization cases, they can go through this case law in detail so they can defend over their client. Means the client means this case is that the assessee recorded the cash deposit in his books of accounts and also maintain the source of it, and therefore it is in favor of assessee. Next, Sunshine Capital Limited versus DCIT 2025 472 ITR 293 Delhi Assessment Year 2008-2009, date of order 16th April 2024, and relevant sections are sections 153 and section 254 of the Income Tax Act. Let's understand issue of the case, and this is now related to High Court. We are moved to the second part, that is High Court. Issue was receipt of order of tribunal by the department. Receipt of order of tribunal by the department, whether actual receipt of certified copy of the tribunal order is necessary or not, or knowledge of order of tribunal is sufficient. Very important. What is the issue? Receipt of order of tribunal by the department, whether actual receipt of certified copy of the tribunal order is necessary or not, or knowledge of order of tribunal is sufficient. Let's see what Delhi High Court observed and held. Delhi High Court observed and held that the expression received employed in section 153 subsection 3 of the Act would not strictly mean that a certified copy of the order of the tribunal in the given facts and circumstances ought to have been necessarily supplied to the concerned authority through an appropriate mechanism. The material on record showed that the tribunal sent the order of the remand to the department, but the department denied having received it. Since the department had failed to comply with the order of tribunal in passing a fresh assessment order with the stipulated time, the writ petition was to be allowed in favor of the assessee. And therefore, the receipt of certified copy of order not necessary, knowledge of order of tribunal is sufficient. Next, Neha Bhausinka versus Union of India 2025 472 ITR 335 Calcutta High Court, Assessment Year 2022-23, date of order 22nd November 2024. And this case involved number of sections. Relevant sections are sections 142 subsection 1, section 143 subsection 2, section 144, section 144B, section 156, section 271 subsection 1 clause D, and section 271 AAC subsection 1. Means this case law is related with notices, assessment, demand, and also penalty. Everything. So, issue of the case, whether procedural irregularities in issuing and serving notices undermine jurisdiction and legality of entire assessment process. Very important case. Whether procedural irregularities in issuing and serving notices undermine jurisdictions and legality of entire assessment process. Let's see what Calcutta High Court observed and held. Calcutta High Court observed and held that the assessment order passed under section 144 read with section 144B, the consequent demand notice under section 156 and the penalty notices under section 271 subsection 1 clause D and section 271 AAC subsection One were vitiated due to procedural lapses and non-compliance with statutory provision. The notices under Section 143 subsection 2 and Section 142 subsection 1 were not served to the assessee at her registered email address as mandated under Section 282 of the Act, but were sent to where? But were sent to an unregistered email address, thereby depriving the assessee of a fair opportunity to respond, violating the principle of natural justice. The failure to adhere to this established protocol and the absence of proper service of notices invalidated the subsequent assessment proceedings and the ex parte assessment order passed under Section 144 and 144B. The revenues reliance on the assessee's PAN database. So what revenues relied? Revenue was relied on the assessee's PAN database or an alternate email address could not substitute for statutory compliance. This is the very important part of the case. Revenue's reliance on the assessee's PAN database or an alternate email address is not sufficient at all. It's not a substitute for a statutory compliance. And accordingly, in this case, the assessment order, demand notice, and penalty notices were all quashed and set aside. Very much important. Means if the revenue relied on assessee's PAN database and sent notices to unregistered email address, then it's contradictory to the natural justice. So it's contradictory to the principle of natural justice, and therefore this case was decided in favor of the assessee. Next, World Vision India versus NFXC 2025-472 ITR 564 Madras High Court Assessment Year 2018-19 Date of Order 19th December 2024 and relevant sections are Section 37, Section 142, Subsection 2A and Section 144. Let's understand issue of the case. Issue was whether special audit report for earlier assessment year could be a basis to conclude that the similar pattern would have been followed by the assessee during the subsequent assessment years. Very important of case law. Whether special audit report for earlier assessment year could be a basis to conclude that the similar pattern would have been followed by the assessee during the subsequent assessment year. Let's see what Madras High Court observed and held at. Prima facie reliance on the special audit report under Section 142, subsection 2A, generated for the earlier assessment years could not be a basis to conclude that a similar pattern would have been followed by the assessee during the subsequent assessment years, and to do so would amount to assessment by sampling. In terms of Section 142, subsection 2A, the special audit report could relate only for a particular assessment year. The special audit report could relate only to a particular assessment year. Therefore, the matter was remitted back to the assessing officer to pass a fresh order on the merits and in accordance with law, independently, without getting influenced by the special audit report under Section 142, subsection 2A, generated for the earlier assessment year. Hope this video will help you in your litigation practice and will keep you updated for recent case laws. Please note down my contact numbers, and if you like this video, please click on like and share with in your professional network. And also, if you are not yet subscribed Tax Guru YouTube channel, then do subscribe it for latest updates. We'll meet soon. Bye.